Hi guys, my name is Michael Glass and I'm here for SCM Forex, and we are going to continue down our path of how to be a successful trader. Before we do that, we always like to start off with our disclaimer, and that basically says that any trading you do is of your own decisions. Any strategies we talk about are for educational purposes only. No matter what type of trading you do, stock, forex, futures, options, there is a chance for risk of loss. Trade at your own risk. Again, this is our video series on how to be a successful trader. We're trying to share with you habits, the way successful traders frame the market in order to increase their odds for high probability trading. To do that, we have 5 videos, really 6. We have an introduction video, and then we have 5 specific videos on different areas that successful traders look at in order to be, to again, increase their odds of trading, to be high probability traders. Do you know what time it is? It's about looking at the time of day and the type of day and recognizing what strategies we should use based upon the type of day that it is. We don't want to do breakout trading when it is a consolidation day. Today's video is about chart patterns. And again, we're not here to endorse a specific pattern, but we are here to show you how traders layer things together to increase their odds of trading. Similarly, they use technical indicators to confirm what they see. We're not here to endorse any specific indicator. We are here to teach you how to look at the market like successful traders. And then risk management, cut your losers, let your winners run. How to properly engage in the market and not get yourself caught up in fear. The biggest thing about stock management is people are so scared about losing that they actually lose. And I'll explain that more in that video. And finally, the most overlooked part of trading is the psychology of trading, mental fitness of trading. We'll show you how, again, successful traders train their minds so that they can comfortably enter the market and not be afraid. So again, today's video is about chart patterns, and we're not here to endorse specific patterns, but we are here to teach you how to look at price action to help you confirm what you saw as you're getting ready for the market, identifying the type of day. In order to do that, we kind of got to go all the way back to some Candlestick Basics. The main purpose of Candlesticks is to give you a visual picture of what's going on in the market. Each candle represents a certain amount of time. It all depends on A, the time that you choose, and B, the types of charts. And we'll look at some charts in a second. Traders combine these candle patterns to form patterns to highlight or identify potential opportunities in the market. There's all these different candle patterns. When you start combining them together, we all know the basics of opening at the bottom, closing at the top is bullish, opening at the top, closing at the bottom is bearish. And again, we're not really here to endorse any of these. There's a book by Steve Bigelow, and he goes through all these percentages and whether or not you believe percentages. I can make statistics to prove anything, but there's a book on that. So if you're really curious about how these patterns and how successful they are, go ahead and Steve Bigelow has great trading books, and there's plenty of books on, videos on YouTube. But again, it's not about a specific pattern. What's more important is your ability to engage with the market and look at the price action and see what the price action is telling you. So you may start off with the basics, which is our candlestick charts. And then there's other types. There's tick charts, hiking and sheet charts, range bars. I think they all kind of fall into this category here. They're based on momentum. They're based on volume at price and contracts. Market profile also has to do with, volume at price and a visual representation of how many traders, how many contracts went off at this price level, and you can use that to identify volume nodes and support and resistance. And there's been a big push over the past couple of years about order flow. And what the difference is, as we go to our old basic candle, we can see close, open at the bottom, close at the top. But with order flow and with market profile, but mainly order flow, you can see the numbers inside and you see what's going on. It's one thing to see that we open here and closed here, but if we saw these big sell numbers coming down, that might give us a head up that this was resistance, and this next candle may be a push down. And order flow gives you that because you can see inside the candles. So I certainly recommend that you do your little investigation. Again, we're not going to endorse any one of them, but the important thing is for you to understand that we use these candles, we use the candle patterns to form patterns to help us get a gauge of what's going on with the momentum in the market. So what's really important is not to say that this is a double top, or you could also make an argument that we have a head and shoulders going on here, with a neckline going on here. What's more important is for you to recognize that we have to put the market in categories, and we do candlestick patterns the same way. What patterns can tell you that the market is overbought and oversold? What patterns can tell you that we're at support and resistance? What patterns can tell you about the momentum, the market sentiment? So we're looking for patterns for overbought and sold to show failures. Double tops and double bottoms are basic patterns that show support and resistance. Head and shoulders, wedges, bull flags, bear flags, all of those are breakout patterns that show market sentiment. They show the momentum of the market. And when we layer these things together, they help us to analyze practice action to make educated decisions about our trading. But the problem people have is that they fall in love with one pattern. Really, when you think about it, if you combine what we talked about in our first video, do you know what time it is? There's no reason for you to be trading a double top pattern on a trending breakout day, because we're going to break that support. We're going to break that resistance. Another problem is people forget about news. If it's 9:59 and there's 10 o'clock news, it doesn't matter what the chart pattern is showing you. So you have to be aware of the time of day, the type of day. And finally, we overanalyze it. Getting into a tick for tick battle, getting into a candle for candle battle does you no good, because you get into analysis paralysis. It's important for us to know what these patterns are and know how they can interact with the market. But what's more important is how we combine all that we know about the market so that we can engage and be successful traders. Again, all of these videos in this video series are all about opportunity is knocking. How can you look at the opportunities that the market is applying, the type of day, the time of day, and apply the right strategies? It's a momentum day, so I need to take breakout trades. It's a consolidation day, I need to take reversal trades. This is how high probability traders, successful traders, define their edge. I recommend in the beginning that you take one and master it and get really good at it. So be a breakout trader, be a reversal trader, but don't be both. Find one strategy that you like, master it really well, and then you add on. Define your edge, get really good at one thing. That's what successful traders do. They don't try to be a jack of all trades. They don't try to do everything. They get really good at one thing, and then they scale up. So if it's a breakout day or if it's a consolidation day, the chart patterns can help you confirm that, and again, help you apply the right strategy based upon the time and type of day. High probability trading is all about being able to make decisions about the market. It's all about understanding the playing field. It's all about putting the odds in your favor, and then being able to distinguish about which one of these trades is going to be successful. We want to be in flow with the market so that we can know that it's time to act or it's time to sit on the sideline. So guys, that is the end of this video. This is part 2, chart patterns of us. In our next video, we're going to talk about technical indicators. Again, how they can confirm what we're seeing in the market so that we can be successful, so that we can be high probability traders, that we can define our edge, confirm our edge with chart patterns and technical indicators, so that we can then take advantage of the market, increase our odds. We're not always going to be right, but we're increasing our odds so that we can be successful traders. Thanks guys, and I'll see you next time.